Asia Tech Podcast with Graham Brown and Michael Waits.
I'm talking with Giovanni Zangani, the founder of Maestro Equity Partners. Did I get that right?
Yep, correct.
Okay. And where are you from originally, Giovanni?
Originally, I'm near Milan from Italy, so a bit far away.
Okay,
now I'm based in Ho Chi Minh.
I was going to guess that, but I think like in today's world, it's so hard to determine just from somebody's name, like where they're from.
Mm-hmm. Indeed.
So I figured I'd just give you the opportunity to say it yourself. How you're based in where? In Vietnam?
Yes, Ho Chi Minh City for the last 4 years, about 4 years.
So how do you end up in Vietnam?
Yeah, well, actually, it's been quite a journey. I was former management consultant, so firstly in Europe, in Milan, and then I moved to US. And I really was interested to move into investments and private equity because, I mean, right, when you are a consultant, often you miss a bit the kind of the feeling of the real contribution you might have with your clients in terms of, you have projects that are quite short term. And you are not really a full alignment because at the end, after you finish the project, you go away and you don't see the results. So I basically pivoted to Asia, made an MBA in Hong Kong, and there where I started, to have some experience in the country, and is where really I realized, okay, I really want to get into private equity. But China at that time was, 5 years ago, already most of the returnees were, getting most of the jobs I was trying to target. Instead, I've been approached by a local fund, and I saw actually, very similar story with China. I saw the potential of Vietnam, and I think for a foreigner, actually, there was much more room to really make a move and have an impact. So I decided to move to Vietnam, and then I've been here for the last 4 years. First with the company that hired me, and then I moved to a bigger family office, and eventually a little bit of a combination of a few factors like right timing, few companies that really were interested to work with me and my team, and a few investors interested to work with me. I decided to set up my own investment firm, and it's just a few months back, but quite an exciting experience so far. So
right, so it's a great story. Can we back up a little bit? So how long were you at Accenture?
Accenture, I've been basically almost 4 years.
Okay.
Almost 4 years, yeah.
So a decent amount of time. What do you learn? And, I always looked at the consulting business with a little bit of envy, actually. And I've just found that people come out of a consulting business with a really strong understanding of, not just not just how a business runs, but like just the nuts and bolts of how to set things up, what the metrics are that really help a business grow and thrive. I'm just wondering, like, how do you characterize what you learned at Accenture?
I think, definitely what you say is really important, especially what I notice in the investment. If you go investment in emerging market, at the end, it's really, especially in the growth capital that I'm trying to target, it's really about what you do with the company after you put your money. And there is all of kind of little things and projects you might need, and you cannot hire always consultants, so you learn a bit of everything, right? You have a toolkit that is always useful, and it starts from, I would say, like basic project management, where run skills, and then you go into more be able to understand data, and the data in a world that is quite. In general, we say we have so much data, but if you are in Vietnam, good luck. There are a lot of a lot of aspects of the business that you really have to try to take a bit of a guess, leveraging what you can collect, and so I would say a bit of survival spirit, definitely the kind of mindset, never give up. Quite that is quite strong culture in Accenture. So you really, no matter which situation you are, you really learn how to not get discouraged and just keep going and driving and pushing. So that's definitely helping in a market like Vietnam that sometimes is a bit frustrating. You have all kind of different challenges from administrative standpoint. So everything is not just about making your investment, looking at the screen on a deal, and then work with lawyers and bankers. Here is really try to make everything happen at the same time, and you most of the time you are really you have to lead if you want to have to protect yourself and to minimize the risk. You might even need to to lead the legal part, like all the aspects of a deal that usually in more developed market there are different subjects, play operators that they take care. Here I think you really have to master a bit of everything, and that's kind of skill set definitely was very useful, right? In that I got from Accenture. And industry-wise, I would say, like in terms of verticals, I work on retailers, FMCG company, and in terms of skills, data mining and analytics, also something that became quite getting hotter and hotter. So I would say I leverage a bit these aspects. So first, a bit of project management, second, vertical retail and FMCG. And third aspect is analytics, and be able to read data and wherever you can get, and try to make a smart decision.
Right. I mean, it just seems like to me you come out with, it's almost like getting a secondary level or maybe third level MBA.
Correct.
It just does, but it's almost like a real life MBA in the sense that if you learn sort of the theory around business and accounting and money management and finance, and I'm not sure what you studied, we can talk about that in a second, but when you're getting your MBA, then what you learn when you're at Accenture is really how to apply that stuff. And maybe it's great to get your MBA after you go do that so you can see what the applications are for what you're learning while you're learning it, as opposed to just sort of seeing it from a theoretical perspective.
Mm-hmm. Yeah, definitely.
So when you go from Italy, you work in the United States, what was the thought process around, there are plenty of, reasonable places to get an MBA in the US and also in Europe. Why did you choose to go to Hong Kong of all places?
Yeah, good question. So basically, back then already US, the economy was not so great. So there were projects, but I could see there was a lot of competition to get decent projects. So that was more like the macro consideration. So that definitely Asia was growing, and I could see like US was okay, definitely better than Europe, but was still not not like a few years back when there was project everywhere. And more instead of like on a personal standpoint, I was Italy is a bit South Europe. That's kind of very relationship-based culture, and definitely I realized when I was in the US that most of my friends came from this side of the world.
Really?
So it was more like on a personal consideration. I could see actually, Asia in general. Of course, every country has a bit of a different aspect, but they tend to be a very relationship-based society. And when I moved to Vietnam, I realized actually, was a really pretty good guess. I really feel I fit the countries basically. Like Italy, relationship-based, strong food culture, good weather, everything, but is young and growing. So I really feel I can basically really fit, not just on a professional standpoint. I can really, make a career in this side of the world. And I think now I'm really still pretty happy with the decision I made.
Yeah, I mean, it sounds awesome. You and I can talk for hours about why being in Asia in general, but in Southeast Asia in particular, is such an amazing place to be.
Yeah.
And just go back again and tell me, so you started, we're at Mekong, was that your first role in Vietnam?
Yes, correct.
So, and how does that happen? I mean, do they come out and recruit you? You said you were looking at things in China as well, and I kind of agree with you. Again, we can talk for a while about why it's a better opportunity in Vietnam, but Vietnam itself also ends up being quite a domestic market, right? China as well. Mm-hmm. But Vietnam is just so young, right? Mm-hmm. And when you arrive there for the first time, you take this job at Mekong, like what's going through your mind, right? What are the things you want to achieve? What are you thinking about? What's your experience going to be like when you move to Vietnam?
So I look at a bit on a macro level. I could see definitely I read a bit of, a smaller China story. That's what everyone would say. And that would, for my career standpoint, I thought, okay, this is kind of, could be interesting. So let's give it a try. I mean, I could, stay and guess for long, but I really wanted first to try and to have this kind of experience, since I still want to get into private equity, so I said, okay, anyway, it will be good. Even at some point, I decided to, if it's not the best market to be in. But then when I move, and from the first project I had, actually I realized that it's not just China. I think there is something more, especially if you look at South Vietnam, yes, like Ho Chi Minh and the South area. Actually, the way people do business is much less, political, much more. It's easier for foreigners. So I realized already from the first or second board meeting, I saw like people from the fund yelling at each other with the CEO of the company in a very very frank way, and I was impressed. Like I did some consulting project before in Shanghai, and I realized there was quite a difference, and it was not just about it's a smaller China story, but I saw really like a bit of the entrepreneur mindset of Vietnamese people. But I really saw this kind of influence that probably they had from the past, from the American, French. They really had like the mentality to do business. I found quite easier than in China. So less political, less baijiu, less time in the bar, and really more focus on doing the business and things that matter. So that was quite a good sign for me.
Yeah, and I mean, I also like Vietnam. You mentioned it earlier, though. It's a very young population. If you look at the population distribution, it's heavily clustered around, 15 to 29, 15 to 28, and the median age in Vietnam is 28 years old. But that's the median, right? Yes. And what it means is that it's very dynamic, and like you said, you're coming into a situation where the country is. You mentioned the French, you mentioned the United States, and what you're talking about is a country that had been torn by war until sort of the mid-'70s, and that impact of that history was there until like the 80s and early 90s, and you're in a country where I like to say there's never been a better time to be sort of a young Vietnamese boy or girl or man or woman, because basically for the first time in the recent history at least, anything is possible, right? Like you said. Correct. They're not sort of encumbered anymore. You can talk about political systems all you want, but on a day-to-day basis, it's a relatively free country, and people are not encumbered by the politics. And I was watching a conversation yesterday where somebody was saying something, I forget what it was, but like, oh, that's never going to happen in Vietnam, whatever it was. And the reality is that if you had asked the parents of today's children, would there be online banking? Would there be, mobile applications and stuff? They would have said never in Vietnam, even if it existed in the rest of the world. It's not going to happen here. And I think what you see is that the technology that exists today just gives people more opportunity and more freedom. And just because of the way the world political system is working as well, it's a great time to be there. Do you want to talk basically, with that as sort of a premise, what do you learn at Mekong? And then when you go to your family office, I want to talk about your business a little bit later, but what do you learn when you're there that says, okay, I've made the right choice, I've actually gotten a few things done, and this is going to be the best place for me to be for more than just a couple of years. Like, I'm going to make this home for a while.
Mm-hmm. So, the first consideration I told you was more about how you can really, able to work together with the local companies. That was, of course, a question mark for a foreigner coming here and not mastering the language and so on. So that was first consideration. The second is actually see that happen because, Mekong, they are foreigner, founder is foreigner, and still I was able to witness basically the growth of mobile world, like, the great retail electronics store, and seeing going from few shops, and now it's like 1,000 shop is a big company. So really be able to see in first place like that kind of growth. And not I'm saying that it was a easy road, but like comparing to what I could have seen in the US or in Europe, this kind of grow and everything seems easy. Like as long as you are you are in the right direction and you pull out you touch the right button, you start to believe that you can make everything happen. So that kind of confidence, when you start to see one company, two companies, is what actually brought me to anticipate a little bit of time in a normal private equity career and start to let's work on something on myself, because I really start to believe there are a few things that few kind of sector and company that believe I understand where they can go, and I really believe I can convince also people in the old world to put some money and make this investment quite good investment. So
So with all of the sort of noise that you hear coming out of Southeast Asia in sort of the tech space and the venture capital space, Mekong itself, but then Maestro Equity Partners following on, you're not really playing in that space. You're more into the private equity business. Do you want to just talk a little bit about what the difference is and then why you've chosen to go that way as opposed to, building funds that invest in technology startups?
Yeah. So first of all, there is a bit of background, right? So I invest. What I mean is, like, I invest in sector that I understand. Especially, you are in a foreign country. You take typically minority, especially in the past. Now you have more, probably less limitation from the government, but still you typically invest as a minority investor. If you want to have influence and not get rip off or have any trouble, you really need to understand the business, and understanding means really have a deeply operational understanding of what's going on. So that's already made a bit of selection, because my background in in Accenture and before was more on retail, FMCG. So these are more like traditional business. That's one point. The second aspect is that basically, definitely Vietnam is a young population. Education-wise, comparing, global ranking is doing quite well. But I don't know. I still don't see it as a Silicon Valley, right? So there are quite a few good companies. But if I look like really the big companies that I saw build up in this side of the world, for me still driven by consumer. In the more traditional way, and technology, what I see and I understand mostly, is basically consumer internet or like services related to anyway to serve this population. So I try to stick with what I understand, and but I'm aware that the young population is also, of course, it means great upside potential, but it means also risk in terms of they really change behavior quite quickly. We saw in the West as well. Millennial, they are disruptive in many industries, just in many traditional industries that they are the one that I'm looking at. So I have to be careful, because I'm sure Vietnam as well. From one side, you try to be local in terms of which investment you are going to touch. At the same time, that this kind of young population is going to adapt quickly to more Western and international global standard. So you have to play a bit between, try to anticipate a little bit these trends. But I feel it's still more predictable than going into tech space or these kind of companies where there will be much bigger bet and less predictable, and definitely especially if you want to focus on Vietnam, I believe you can invest. I would be able to invest in one, let's say, F&B company and make it a good return if you put $5 million in 5 years, even if it's just a Vietnam story. If I'm in the tech space, I'm not sure if I'm able to do that only in Vietnam. Like I would consider it at least it has to be regional. So that's a little bit what is my gut in this regard.
No, I think you make a really good point, actually. And it's no insult intended to Vietnam, but you're right. As the education sort of level climbs up the global rankings, and it's doing that rather quickly, right? I mean, Vietnam is known for rising rapidly in global education rankings, but it also means that the economy, particularly from a GDP per capita standpoint, is more in a stage of small businesses, whether it's SMEs or middle-sized businesses, even larger businesses, really figuring out how to modernize their business and become more sort of capital efficient and financial efficient. Is that a fair characterization?
Yeah, I think is a good point. I agree.
And what that means is that the opportunity embedded in a business that's already, let's call it successful, if you can make it more financially efficient, and give them and bring that sort of finance sort of part of that business, and even the growth part, not just locally, meaning in that town where the business operates, but in sort of the local region and in the whole country. If you can make that more efficient, you can take a business that can compete better and faster and more efficiently and can make it more profitable. And like you said, at this stage of the country's development, from a financial standpoint, maybe the private equity business is actually a better investment than the venture capital business, where the fund, I'd be curious to know how you get funded, right? Because that's an interesting side of the business to me too. But from a VC business, you go out, you have limited partners, you have general partners, you invest in small companies, and that money can be locked up for 5 to 7 years before you even understand whether it's going to be successful or not, right? Not if it's going to be, not if it is successful. And it sounds like you're already investing in businesses that sort of have a successful business model that are creating cash flow, and you come in and make investments and just make them way more efficient and hence add more value and create more value.
Yes, even I would say there is a bit, it's not just efficiency. Definitely they are, I mean, I took mostly on retail businesses. So before 2015, there was much, the sector was very protected from the WTO, etc. So this company, they really had no competition. It was super fragmented in all categories you are considering, from from bags to apparel. There was no real international competition. So they built quite successful small businesses. The problem is, like, from 2015, when the government started to waive all this kind of protection, they start more and more competition. So they realize that the time has changed. So they already have a profitable business, but to really be able to survive for the next 5-10 years and to really build a national story, they have to step up, to play a different game. And that's why the company I'm dealing with, all of them, they are profitable. All of them, they could, even just go to a bank to borrow some money, but they want my support because I'm approaching them more like as a consultant. Like, we really work hands-on even before putting money, to be able to show, like, basically, how can we support and really get involved operationally. So yeah, it's efficiency, but it's not just on the financial part. We really get into in the operation as well, because the competition is there. I believe there is a strong, from the opening, there would be a lot of, new players, very, a big consolidation, especially for the local players. So few winners, they will survive, but the one that they make it, like if you can see in other markets in Asia, the one that survive, they can still really dominate their category. So my goal is basically to select the company, the concept where I believe we can be one of the top 3 in the category and support them to get there against the international competition, which I'm sure they are not going to touch every segment of a business, but they might stay more like the mid-high, and the concept I'm looking at, like more like mid-low, like more for mass market. And that is where I think is the sweet spot for local company to really be able to dominate regional, first of all nationally, and then go into the region in another similar country.
Can you just clarify for me, so what changed from a regulation standpoint in 2015 that made these companies realize that they had to start competing with potential foreign businesses?
Before 2015, for example, you have the economic test, the ENT test. So basically, in theory, maybe you could invest in a company and a retailer as a foreigner. What happened that when you have to open the second location, basically you have to go for a licensing, ask for the local authority, local government, and it may take up to 2 years to get the license. So if you have a chain of 30, 40 shops and you need to ramp up to 200, 300, and if every shop it takes a couple of years to have a license, that would be really quite
right.
Quite challenging.
That doesn't work.
So it doesn't work. So that was one of the measure. And then step by step, they started from F&B, for example. That is a sector that I like it, and I'm quite keen always to look at. Also the same. They now also foreigner you can invest, and the company wherein you invested is not treated differently as a local company. So that's make things easier when you try to ramp up, and that's the direction. So I'm sure it will be much at some point it will be, if you are foreigner, if you are local, will be almost treated the same way, and that's is a fact. And companies, they can see, like if you see they open in Vincom in the center, in a mall in the center of Ho Chi Minh City, they open Zara, H&M recently, and there was like thousands of, like, it's really crazy, like the number of people and the clients in the first few days, and everyone thought there was just the opening, but after months, if you go to Zara at night, it's full of people. So that's something that other retailer they see, and at the end is retail space is you can sell apparel, you can sell whatever. Is at the end you have to pay a rent, and you have to sell something and make sure you have enough margin to to cover your cost and make profit. So everything if you are a retailer, even if you sell the different categories, you can see there is competition, because if an international player goes to bid for a space, they might pay much higher rent because at the end they might even account for an investment and not even care about how much return they make on that specific shop. So all these aspects that make tougher for local players to really be able, to keep growing in the way they were doing before. That seems like just, keep opening shops and everything will be fine. Now I'm sure they also, in terms of, they look at the numbers, the rent get higher, profitability get lower, and the client itself, they start to go into the international brands. They start to, they might say we are proud to buy or endorse Vietnamese company, but if you look at the number of clients that were these foreign players, it means that actually with media, the social media and so on, they really could get into the heart of Vietnamese people way before they really physically opened the location. I was amazed that this kind of brand, some of them, like there was Pull and Beer, which is still Inditex Group and so on, I just briefly know them before, but I could see like from the number of people, the kind of local people really going to the shop and so on. I can definitely say these people, they knew the brand way before me. That was a bit surprising, and I guess the role of social media is quite clear. And comparing to China, probably that they've been a bit more open on that, and that's probably is like an accelerator of what is in terms of the adoption of the local consumer for foreign brand and products.
Right, so this is interesting to me, right? If I look at your profile, you mentioned from the beginning that F&B, food and beverage, and also fast-moving consumer goods and retail was a place where you were focusing from the beginning. What was it about your experience up until the founding of Maestro that led you to believe that those sectors would be so powerful? Or is it just the case that Vietnam is at a stage of economic development where kind of everything is growing so fast and that everything's a possibility, and you just chose a sector that you really enjoy and that you like so much? Like, is it sector specific or is it economy specific?
No, I would say it's a sector specific, and the first consideration definitely is a sector that I like. Is something that also on a marketing standpoint, you mentioned about getting funded, and being Italian on a marketing point of view. If you invest in a retailer and F&B, they kind of get it. Like they think, okay, you might bring a bit more, higher standards. Retail is all about, at the end, is it's quite a simple business, but it's about detail. So I don't know. It seems that people that they want to invest, they think that is a plus. But on reality, I think is more about, okay, we are in a stage of a country that people really love to consume. Like I heard talk with some local people here, and they say, when I was a kid, I would go with my my parents in a supermarket, and they were counting, like making the check of what we could buy or not. And now it's like just the feeling, go inside and be able to buy whatever I want. Something that from the West world I take for granted. Probably my grandparents during the war, they could have that kind of feeling, but
right.
This is for these people is like just the ability to go there, and maybe don't even need something, but the ability to spend is something that easily is boosting the consumer, the consumerism on this country. But then is retail and not just the economy that is it's definitely growing at an interesting pace. Why? Because it's more practical. Investor, they like to minimize risk and to have higher returns, and retail is basically in the value chain, is basically the part that is require less capital, and is where you get higher margin, and so it's easier to project. Okay, in 5 years I can really make 5 times my money, which is usually a bit the rule that I keep in mind when I need to consider an investment. And if you have to consider to start into production or invest in other kind of capacity, that it might take longer, because there are so many steps before getting to the market, to the hands of the consumer, that you want just to get basically to cut that and just get the last part, which is basically, okay, already production, there already is a proof concept, people already know it, they just need to get, really scale it and make it more operationally like sustainable and go everywhere in the country. Like this is the step that is make easier to predict, that you can make good returns without taking too much risk.
Right. I mean, and this is very different, obviously, from the venture capital world and sort of the tech startup space, where you can get a much better sense for what your returns are going to be over time, particularly for a business that's already operating. So, talking about investment a little bit more in a little bit more detail, do you raise capital prior to not understanding, but to knowing what your investment targets are? In other words, do you have an LPGP structure where you have a pool of capital that's ready to be invested, or are you more likely to sort of find an opportunity and then go to a group of people and say, we should invest our money in this thing, and then pool that capital on a sort of an LLC or a special purpose company basis, and then invest it in that, and then provide services to that company? Like, what's the structure for the way this works for people that are listening?
Yeah, so basically what I realized, first of all, I'm realistic. Like, first time fund will really get lot time to get funding in a blind structure. And I can see, talking a bit with a few family offices that I'm familiar with, that people don't really like much if they can choose to invest in blind money, especially in a market like Vietnam that in the past 20 years, like especially the first funds that they came in, they didn't build really a good reputation. Like, some people made money locally, right. Yes. Many investors made money. I'm not so many. So what I try to do is like really, playing open cards, because I'm really confident on the projects that I'm working on. I have companies that they don't really want to just raise money. They want to work with me and my team. And I have few families office that I know that they kind of like this space. So I have a few opportunities, and on a deal by deal basis for now is what, I put together 2 or 3 of them, and I just make the investment for now. Then when you do 3-4 good investments, if you want to consider to go more on a blind fund structure, I might consider. But at this stage, I can see really is a bit as long as I'm confident on the project I'm bringing, and I have a good relationship with the people that trust my work and know me for a while, I think that's the way to go. And then after you might consider. But I think, especially if you go after money from family offices that are people that made money themselves being an entrepreneur, they really like to see what they're investing in. So I'm keeping like a LGP-GP structure, but on a deal level, which is makes much easier, because you might find the guy that made money out of retail and is happy to invest in a retailer. You find another guy that makes something more related to food. So it's easier to customize the deal and with the different appetite of your investor. And but definitely before I work with the companies, before even that. So I want, before try to bring up some opportunities, I have to feel comfortable in the direction the company is taking, and the company needs to be ready. So with 2-3 companies actually we started to collaborate way earlier, because they were definitely not investable. And the problem is basically, if you are based in Hong Kong or in Zurich or in Singapore, and you look at the deal on a screen, and you need just based on number.
Right.
So this kind of choice, they might work in developed market, but here most of the investment made in private equity from this kind of investor, looking at a pitch book brought by brokers, they are really, really risky, and some of them actually they are scam. But we are here locally, so we definitely see if, besides the numbers, which there is a lack of, of course, is a corporate governance, and, in terms of, accounting, finance, there is a lot of, they are quite weak, these companies, but we know which one they're really doing well, because we see, daily, we see the traffic, we see many other aspects. So my work is basically to be able to make this company to show the world outside Vietnam that these are the winners, because I think there's still really big value, especially because, as I mentioned, about the lack of transparency and so on. You cannot just bet on some presentation that you receive on your desk in Hong Kong, and so that's part of my work, and there is work that you need to do a lot of work you have to do before investing, which is legal standpoint, they have to be, you don't want to bear too much risk for the investor. Financially, you need to put the accounts in place correctly, go through an audit, and just to go through an audit, I'm telling you, is really like a big step, and there's a lot of work involved. So I'm trying to get all of these aspects, so legal aspect, financial aspect, and operational aspect already already before getting the investment, because that's give comfort to anyone that is putting money that the direction of the company is making. And also for me is basically give me myself comfort that the company is really, we are able to work together, because of course when companies they look for money, they might seem collaborative, but it's really in the daily operation that you want to see if there is really is a partnership or not. As I said before, you are a minority shareholder, you need really to be able to influence. And I don't believe, legal framework, yes, you have here, applicable and enforceable, not sure. The way I look at the investments, you have to be relevant for your company. Otherwise, sooner or later, when things goes bad or something, you will be scrapped. You're in a foreign country. People here are different. They come out from the war. They're not like, it's really different mentality, different mindset, so different motivation. So that we have to be careful as a foreigner playing, in this market. So that's why I really need to see a bit more, kind of collaboration we can have, the direction we are taking, and then I'm comfortable to bring money to the table.
Right. I mean, this seems to be like a recurring theme with the way you run a business, and you seem to have hit a sweet spot, right? This whole concept of a foreigner coming into Vietnam to build a business really does necessitate building the proper relationships, but also having a collaborative opportunity as opposed to just investing money, right? Money, in my mind, is a commodity. You can find it sort of anywhere. And you're right, being on the ground as well means that you can sort of see the opportunity from the beginning, but also understand which opportunities are real and which opportunities are fake. And by building that relationship, not just with the companies with whom you're interacting, but also with the potential investors locally and globally, it seems like the right way to build a business. And that seems like a recurring theme. You mentioned this sense earlier, like it's not political, it's more relationship-based. And building that relationship takes time. So it does seem like the right strategy to me to not build, like you said, from the get-go, an LP-GP structure, but just present the right deals with a good investment return. And over time, that investment mentality will kind of take care of itself, it seems to me.
I agree.
Yeah, and so you also mentioned when you talk about Maestro Equity Partners that the name of the company itself actually has a meaning, in the sense that you could have just called it Maestro Capital.
Yeah, correct. That's good. You got it then. Yeah.
Yeah, but so what's your? I think I want you to sort of explain that in your own words. I think I understand it, but I want people that are listening to understand the difference between just the mentality that says I can call myself Maestro Capital and mean I'm just a source of money, even if I'm not. That's what it's going to seem like to people when I walk in the door. Or I can call myself Maestro Equity Partners, which means it's in the name, right? We used to joke about this when I was at work. It's in the name. I'm going to be an equity partner of yours. And what does that mean? Not just from a sort of an external viewpoint, but what does it mean internally and like from a day-to-day operational standpoint? Can you just explain that as well?
Yeah. So glad that you got the point. Is really that's why we gave that name, because as I said, we realized, especially at this time, capital. Most of the funds already raised money. So what really company were looking for, especially the good one, were like really a partner, and but that is easy to say than doing. So that's why what I mentioned before, the way start to work together with the company before, and for me that means first of all to have a line of a vision, and this seems easy, but sometimes they grow up.
It's not easy. That is not easy. Actually,
it's not easy, and especially this company, they grew up in an environment there was not much competition, so they don't really have exposure to other markets. They don't see many risks. So first of all, like together, because sometimes I really help some of these companies. They don't dare to dream big. They maybe are people that come from poverty, and they are able to make 1 or 2 million a year. How you can blame them? They just want to keep what they've been doing for forever, right?
Right.
So what I'm trying to first of all to build together a big vision, if it's something that appeals to them, and then when we start to work together, it means after that we go into that's what it means. Let's translate it operationally. So we go all the steps, all the departments, what we can improve, what we can we do better. And we try to have first of all, as I said, we try to be laser focused on the sector we look at. So I don't believe much in the people and investor that say, oh, we can support you operationally, but then they invest in aerospace, like then retail, like 10 different sectors. So I really believe in being focused. And the second thing is because entrepreneurs, you can, maybe at the first meeting you might have like kind of few buzzwords and you might convince them, but when you really start to work together, if you know your stuff, things come out. And especially because you don't have them already invested, if they don't see the value, they'll be able to just run away.
Well, and they'll notice it right away, right? And like, not to make too fine a point, but you can BS somebody at the beginning, but as you get into a longer conversation, you can tell whether they know what they're talking about or not.
Yeah, indeed. And so that's happened with the company we are working now. So since the beginning, we start to build together with them, like give a big vision. They really buy into that. Then we start to work from, I said, like vision. Then start, okay, what is the mission, vision? So that, and step by step, we go deeper into operation. So we started to basically fine tune their concept, standardize it, understand the organization where they need, but like weekly. So that means in terms of practical term, it means that every week, at least one full day, we are, with the company. And this, I believe, it should be like that for the first 2 years of an investment, like really, get really involved operationally. And I don't mind do the work that, it seems a bit, as I said, like some investor might look at, down on this kind of very operational work. And I think actually is really the value that we can bring. And this, till you don't have that kind of understanding, I think is hard to support.
It's impossible, right? If you don't get your hands dirty, then you're not really helping to operate the business. And I think what you're saying is that there's not a lot of prestige externally in saying, I go in there once a week or twice a week. I roll up my sleeves, I take off my jacket, and I actually do real work, right? There's some sense of entitlement, I think, that most investors have that says, I'm just here to raise money and I'll give you advice sort of, from a high level basis, but don't ask me to actually do anything hard. But what you're saying is that doing that hard work actually helps you get trust and also helps you earn returns for your investors, but it also gives you follow-on business too, yeah?
Yes, and the amazing thing, like when I see other funds invest and they have crazy valuation, and why? Because the companies they see them as a financial investor. They see me more as a partner. So when they start to go with valuation, as long they really basically don't negotiate. They see me as a partner, so we can have something that is fair for both. And I really play open cards, which is quite not so common. Usually as an investor, you try to have in your mind the true value and, try to edge a bit the difference perception from ways the company and your view of the business. I try to, you go there already with really open cards. I show their financial model, what is my return, what I expect to make. And so everyone, see what we can achieve together. And going back on the operational involvement, just to say, we did that training to be able to go into the shop. I would like to do basically, I don't know if you're familiar with 3G in a store in South America, what they did with the Burger King and so on. So they really are really involved operationally. And there is a story of the CEO of Burger King that, spent some time within the store. So I'm trying to do the same thing, basically. We have a training, and once a month, I would like myself and my colleagues to stay in the shop, like to do the work of, the last step of the chain, like to sell the product, to see what is, what's going on, what's the perception of the people, and what all the advice we gave, actually, they are making any impact. So, and always keep that kind of, feeling down to the consumer, which is, I think, for the sector I'm looking at, is really, really important. And also, like the CEO, the moment he says, he sees this kind of, involvement, they're really excited. And that's why the company I'm working now is, they've been approached by 2-3 other funds. And, no problem, tell me, they can't, but, they show me they look like telemarketing. Like in his mind, what he thinks is like, I see that you are, for me, it's a different discussion. This is, these CEOs, these founders are quite young people, that very simple people. So they want, some kind of operator where they can feel comfortable to work together. and maybe ask advice on very basic thing, but that's part of our work. And when I feel comfortable, of course, they are running the business at the end of the day. So step by step, when I see that they are able to do things by themselves, I step back step by step. But at the beginning, I think really has to be a lot of daily work and from all aspects. And I think is also part of the reason why I really enjoy it. So it's quite fun. But if you look at just as a time return point of view, maybe other, especially the big fund, they don't see like it's not sustainable maybe as a model for them. I don't know.
Right. So I have a view on this, and actually I find this conversation really interesting, and I'll tell you why. Okay, let's make an equivalency in the venture capital world, and I want to ask you a question at the end of this, and that is, you see some of your loudest, and I don't use that term nicely, but you see some of your loudest venture capitalists talking about how they're the most prolific investors, or they make the most investments. And to me, that is a signal, a tell. It's a market signal that says, we're going to make a ton of investments, but we're not actually interested in any shape or form in your individual business because we can't focus on it at all. Right? So in some cases, you'll hear, VCs raise, call it $25, $50 million and say, we're going to make 20 investments a year. It just seems like too many to me. Right? And I was originally going to ask you, how many investments or how many businesses can you sort of invest in a year? And I realized it was actually the wrong question. The real question is, how many clients can you serve at one point in time? Because you're not just, an investment for you is not just like 2 months of due diligence, sending in some capital and walking away and going to a board meeting once a quarter. It's more like, we're going to do, I'm guessing it's something like 3 to 5 at a time, and that could take 2 to 3 years each to actually come to a point where you can step away, because then you've had your full level of impact. So how many do you think you can do at one, concurrently?
Yeah, so this is definitely a fair comment, especially at the beginning, that I want to try to be really involved, not just with the clients, but also with my company that I just started.
Correct.
So I would say probably 2 or 3, or I would be more than happy if in 1 year I follow 2-3 companies at the same time. And so that said, it means that for me in the next 2-3 years, if I make 4 or 5 good investments, I'm quite happy, because this company also, I'm trying to really, the one I'm spending so much time, I also the one that I really believe I start to raise a bit the bar. So of course the threshold, I think the 5 times in 5 years, but some of these company I really believe they can be 10 times, for example. So I think it's still worth, instead of going for, especially the kind of size you have, is still quite small market. So you really have to pick the big winner, and if you pick the 3-4 good companies, and I think is that's make the economics work. So plus you really have I think is the feeling you have when you really be part of something like that is great. So I will never be able to witness and take part of this kind of growing in my country, and is seeing these people just getting their business bigger, and all also the impact that they have, in terms of employment, and as all the people that they start to go on board and work with them is really exciting. It's really energetic, and that I think is what I miss back in the old Europe, in terms of feeling. So.
Yeah, I think you make a really interesting point, right? And that's why I wanted to bring up that question of how many can you do concurrently, because I would say, actually, if you look at the most impactful and the most successful venture capitalists as well, right? Without sort of without making too much of an equivalency, is they don't invest in a ton of companies. They highly curate what they choose to invest in, and they as well also try to add value as a partner, as opposed to just making capital injections. I'm a really firm believer, I said this earlier, but I'll say it again to make the point, that money and capital injection is a commodity. Anybody who has money can do it, but it's adding that extra value that turns that return from a 2 times return or 1 time return into a 5 to 10 time return. And the only way to do that is by really getting in the weeds, getting your hands dirty, and doing the types of things that you and your colleagues do. So for me, when I look at the private equity space, I really want to look at firms like yours that are actually going down and doing the hard work and really becoming partners as opposed to just an investment vehicle, which is, again, why I asked that question earlier, what the structure was. And to be fair, if your investors are also entrepreneurs, their ability to determine what is sort of a valid business and isn't a valid business is way stronger than a normal investor, than a normal venture capitalist who's either A, never run a business or only run one type of business that maybe succeeded too quickly. Their ability to analyze has nothing to do with yours and your partner's ability to analyze. I think it's a much better model. And I actually think that even as you get bigger, right, and unsolicited advice, but even as you get bigger, the idea that you're an equity partner and not just sort of a capital injector is a way to continuously sustain that business. You don't really care, actually, to do 100 deals a year, maybe 3 to 5 at any point in time, because if your returns are 5 to 10 times, that's an incredible business. But the impact as well is also huge. You know, you talked earlier about employment. Like, I get the happiest when I make an investment or I help a company that ends up employing 40, 50, 60 people. That really makes me happy because now you're changing lives across the board. Yeah.
And going back what you mentioned before about the structure, that's also why I think, besides, as I told you, like the time will take just to raise a closed-end fund. But the second point is really about giving the flexibility to don't have the pressure to deploy. Because in the firm I was before, I could see at the end sometimes you take deals which are not great, but just because you have a pressure, because the time, the clock starts ticking. And you have to deploy capital, so you really have to, to compromise and just pick a company where you might not really be comfortable, but you say, okay, anyway, I need to deploy capital, otherwise I have pressure from my investor that, they start to question that if I really have a, good pipeline and so on. And you make like some, start to really put things really stretch. And I don't want that, especially at the beginning. I really, this is a first time fund. I really want to have, the first few days that they really have to shine, and I want to show the work. So no pressure, like just do with the company I feel comfortable and do the work, and I'm sure time will say if things are done properly. So
no, look, and I think you made a really good point here too, and this is something that most people outside of the investment business either don't understand or ignore, and that is once you raise a fund, there is pressure to actually deploy that capital. You have to, because you have to make a return, and that return, unfortunately, is judged over a specific amount of time. And that time is, in a way, it's random, right? Like 3 years, 2 years, it doesn't mean much in the context of actually building a business, which may, for a certain business, take 6 months, and another business take 6 years. It's just how much effort you want to put into it. But if you have, like you said, a $25 million fund, you're under a ton of pressure to what I say is to make a bad investment.
Yeah, correct. Yeah,
and I don't think most people understand that. So you've been at this on your own business for how long now?
We started in April.
Awesome.
So yeah.
Awesome. So this is a really exciting time for you. Like, are you in a growth phase? Are you hiring people? Like, how do you see this thing developing over time?
Yeah. So for the next year, I think, as I said, I try to close 2 or 3 investments. And I think till that time, probably, the team we have 4 people, I think is enough. But, definitely after that, I, would like to not change in a way, probably be, less involved in the business, but probably, to try to replicate and maybe find, other people with strong consulting background and passion for really to support companies to be able to, to escalate. And start to look at outside Vietnam, because I see common themes in other markets as well. And as I believe in industry focus instead of just a country focus, I believe would be really valuable if we can leverage this experience in this sector in other markets as well. So I believe at this time cannot be anymore just a consumer or big team. But I really believe in the leverage of being industry expert or some specific sector, and on that you can really start to look at other markets and start to be creative around that industry that you start to build a competency on.
Yeah, I agree with you. Look, I don't want to take up much more of your time, but I think you've hit a sweet spot, and if you continue to grow the business in the way that you have up until now, I think the opportunities are just massive. and not just in Vietnam. You do have a chance to build a really large business and a really large practice. Look, I really want to thank you, Giovanni, for taking the time early in the morning to come and talk to us, and hopefully we'll be able to come back to you periodically and just get updates on what you're doing, what you're seeing, and how you see the market growing, because I think you have a unique insight actually into what's going there, and I really appreciate your business philosophy, and I want to kind of watch this develop over time. So I really appreciate your time, and just want to thank you for this morning. I really appreciate it.
Thanks it was really an interesting conversation. Really appreciate it.
You've been listening to Asia Tech Podcast. Find out more at www.asiatechpodcast.com.